All right, welcome back to another breakdown video, and today we're on the NASDAQ, and we're actually going to go through a couple scenarios, based on when this week started and what you had to do to find a setup and then to execute it, right? So today is Thursday, right here is the 12th. We're just going to go back into Monday. Here's Wednesday, here's Tuesday, and then Monday started here on the 9th. But in any case, this is our higher scale, 1 to 500 scale on the mean wrinkles. So this is high enough to where you should see a clear trend, a clear bias rather, so you can determine where you want to place a trade, or at least what direction you want to take a buy, or do you want to take a sell, right? So we can clearly see that it's been falling since around May 4th and beyond, right? A little bit before then, but in any case, we're going to stick to, like I said, around the May 9th area, about right here. Thursday, Wednesday, Tuesday, Monday. So week started here on the 9th. Let's just put this a little bit before it. Cool, that works. So all we're looking for on the higher scale is a break of structure, right? And that's literally it. So these turning points are pivots. You can draw lines up here at the tops of these. You can draw one right there. But since I already know that it's been in a downtrend, I'm just looking for that to continue. I'm looking for more continuation trades because that's my bread and butter. And if you want to take the reversals, those are completely fine, and I'll show you those as we go as well. But in this case, the easiest way to identify these setups is to spot these pivots right here, these turning points in the market. Get you a red line right here, get you a trend line, and like I said, you can draw them at the top, stuff like that, and just copy it. And so you can put one there, so on and so on. This is a turning point. But in any case, on Friday we created a low, right? And so between the Asian and London session, price just continued to drop. It dropped below that low point right there, and so boom, that gives us another confirmation. The bias is to the downside, is bearish. So what are we going to do? We're going to wait for it to give us a little retracement, ideally before we take this sell, right? So it's going to do one of these things, right? It's going to retrace and go back into that 50 to 61.8 area, or it's just going to stop at structure, which is around this 12,500 price level, right? This nice price level. Or like I said, if it goes up to the other one, that's this 750, 12,750, which aligns with that that 61.8. It's very close to the 61.8. But in any case, like I said, this is on Monday, May 9th. And so all we're gonna do is go down to, and so also to make this easier for you, just save this. As you can see, I have two classes for each pair or indices, and so my mean wrinkles, I use those for loadout 2, right? Template 2. So I just save that, and then once I go down to my lower scale chart, let's get this off here. I'm just gonna load that same template, minimize that. Let's go to the knife. Here it is. And so everything that I seen on the higher scale is showing right here on the lower scale, right? This is the same break of structure. This is the same retracement back up to that 12,500 price level. So now, granted, this isn't low enough to spot a entry setup, but when you don't see it, you just drop down to a lower scale, right? And so now, granted, this is, like I said, this is the 250. Ideally, 125 or 63 should be low enough. But that's just to show you how clear it gets as you go lower, or rather, if you're higher, it's going to be much more clear than if it is if you continue to go to lower scales. The lower you get, the more noise and almost chop that you see in the market, right? So here we go, right here. So ideally, I would have been looking for, like I said, that entry setup, and you can't use anything over here. There's not enough. It's not enough information there for you to use it. So what you would have had to do was wait. right? You would have had to where you got a high right here, and price clearly ran above it. So this was around, again, market open 8:30 anyway. So yeah, this is around 7, well, closer to 8. But around 8:30, this is when you start to see your entry set up to start to form. But from here, let's see if I can draw that a little bit better. And I'm gonna extend that to the left side. So I'm using this high point right here. Price ran above it. It came back below. And your ideal break of structure would have been right here, right? This isn't the straightest one. Here we go. There we go. So the ideal break of structure point would have been the pivot, the lower pivot below it, where the liquidity run is, where this high was, or right after it, before it broke that high. But what happened is it ran above this high, it came back below it, and before it decided to break this low, it ran back in, it ran back inside that liquidity pool, right? It went back up to test those highs to make sure, and anyone who re-entered already and set their stops right there, they basically go ahead and get stopped out, or like I said, they if you have buy stops there, that makes sure they're activated. So what I would then do is move my red line up to this pivot and wait for this structure to be broken to the downside. So now once this is broken to the downside, it's okay, cool. Once it comes back up into the into structure, that's when I'm going to take my entry. I'm going to take the entry right there. Either enter right there once it touches this zone, or once you get that first opposing wrinkle. So you can take an entry here, stop loss above this zone right there. So that's basically 63 pips to the top. Add maybe 10 to 15 to it. You're looking at about 76 pips. That's 77. And I'm gonna 3x that, right? So I want at least 2100, 2200. I'm sorry, not 22, but 220 pips out of that, right? And so that would have basically took me down to this 12,250 price level, and that would have been a nice place to take profit. And I'm out and done with that trade. Granted, it continued to drop later in the day. This is towards the end of the day, I believe around 2 o'clock ish, and continued to do its thing. But that's how you got your first position. Granted, you just had to wait for this to form. You definitely would have had to wait for this to form, but that entry would have came around, that's around 8:53. So not bad. But moving along, we're going to go back to the higher scale, and now we're going to go to Tuesday, right? And so we're still bearish. Like I said, we're still bearish on the bearish side of things. And what we can do is, I don't necessarily like this pivot. Let's use this one over here. Yeah, so let's use this pivot. I'm gonna make this gray, just for an area of interest. Understand that this is a higher scale area of interest where price runs into it. So I would somewhat expect price to respect it, especially since we have a bias that was confirmed to be to the downside. So what I do again, I save it. It's 2, replace it, go back down to my smaller scale, load that same template, and here we are. So that was Monday. We seen how that played out. We got our entry, and now we're looking for something on Tuesday, right? So here we go with that one. Let's minimize that a little bit. And again, this basically would have been the same setup that we already had from Monday. It just would have retraced back up to entry. Liquidity run right there, break of structure. We got a readjusted one right there since it went back inside that liquidity pool. Change this blue real quick. And so again, once it came back up to this price level, on the lower scale now that this bearish order block aligns with the higher scale area of interest, and now we take that once it enters, or once we get that first opposing wrinkle, which is the yellow one, get our stop, make sure it's above this order block right here. And so in this case, I'm adding basically 3 wrinkles. So from here, that's 1, that's 2, that's 3. It's basically 38 pips. So I'm gonna do that above, let's just say 40. So that's 25 to the high. Let's make this a 65 pip stop loss, and let's shoot for 190 pips. Boom, that's a take profit already hit. So because it retraced back to the same area, we're gonna use that same setup. And then you have multiple times to enter into that position, right? You got the first one here, you got the second one there, and then even a slight retrace there for a third opportunity to get into a sale. So that's your Tuesday position. And so literally that's it. And granted, whether you wanted to hold this for, until the 12,250 price level, again, that's a nice place to take profit at. That was about a 270, 265 profit run right there. And so again, now we got Tuesdays. We have Tuesdays set up right there. Now I'm gonna just keep moving this forward. I'm gonna go to Wednesday. And so what's happened here is it's giving us a new low. And so we're gonna create, well, actually I'm not even gonna create a new one. I'm gonna drag this one forward because we're gonna look and see what price is gonna do once it comes to that level, right? And as we can see, what it did right here, this is going into that Wednesday, as I said, on yesterday, it came down to this low and rejected it. But if you look at this low right above it, right there, that's what it did. It still gave us a break of structure to the downside, confirming again that, hey, we're still going to be bearish, but before it continues to run, we're going to expect a retracement. It's going to do a slight little pullback, or maybe even a deep run, a deep pullback, but that's when we want to get into our positions. Once it makes that retracement, once that's done, and ideally that's going to minimize your stop loss and your risk, and that's when we want to start getting into position. So again, you have this area interest up here that's been holding really fine. It's actually been tested a couple times. So what I will do here is grab this new one. Actually, I just make a copy of that. Let's drag this one, boom, and call that a day. Let's make this as accurate as possible. So, area interest, the structure was broken to the downside. We're gonna save the template again. NASDAQ, replace it. Again, this is May 11th. Cool. And now go back to that lower scale. Load that template. Minimize this. And here we are. So this is that first red line, which is, it gives us that break of structure. This is the second one, where it literally tests that price level and then turns around. But it makes sense, as I said, once you get a break of structure, we expect a pullback at some point. Not always immediately, like this one is right here, but we expect a pullback at a certain point for us to get into a better ideal position. So again, you can either take your chance at taking this counter trend trade, and I'm pretty sure if you've done that, you've noticed like, oh, I got into a trade and it ran into profit, but it stopped and started to retrace, and then I lost profits. Or if you didn't move your stop into profit, you lost all of it and you went to either break even or you lost that trade. But that's because that's a counter trend trade, which is basically going to be temporary and not the best positions to take. But in any case, this is our lower scale, and what we're going to be doing here again is looking for our entry. We got a high right here, we got a low followed by a higher high, which is that liquidity run. So you can draw that out right there. Blue line displays the liquidity runs. Break of structure right here, the low right below it, turn that red. That break of structure, and again, I know it's tempting if you're up during this is around 7:30. So if you're up and you see this long run, you're probably thinking like, oh, I should just jump in. Be patient, be patient, be patient. Wait for it to come back and hit your zones, right? So this is the break of structure. We have to wait for it to come back, and ideally, our structure is way up here. So we're not getting into this position because it did not come up until our bearish order block. So we're missing this one. This price level is 12,517, and actually what we'll do is we'll just price that right there. $5.18 is close enough. So what we're gonna do is just scroll forward. We're gonna keep that in mind, and then just go back into the higher scale. And so now, like I said, that's fine. We won't get them all, but that's just practicing patience and discipline. So then later on yesterday, we got our break of structure to the downside, right? So it came down, it fell all the way down to a 11,750 price level, right? And so now let's save that. Save. NASDAQ, replace it. And actually I forgot to do this one here. So area of interest is just basically using the last pivot on a place to where it might turn around at. Not guaranteed, but it might. So now we save that template, replace it. And so now we say, okay, boom, yesterday broke structure to the downside. I know it's already giving us a deep move. It's got to turn around at some point. So go back down to that lower scale, load that template. NASDAQ. Oh, I did that. I meant to load it, not replace it. All right. Back to that lower scale and then just load it. There we go. So again, today you would have to practice some patience, because this was a very attractive move to go to the upside. There's a lot of pips going up. 360, 70 pip move to the upside. But in any case, we have right here, we got a couple setups right here. So liquidity run. Let's turn this one blue. There we go. So you got a high that was taken out by this price level, this price run right here. The liquidity run was over, it came back below that blue line. And so then price fell. It went below this pivot. Right, so it broke structure to the downside. And now we want to wait for that to come back. Draw this out. This 125. And so we got this price level here. And then we have this over here. Right. Gave you two options. And now you want to draw this one. That's about as close as it gets, right? So as I say, when there's a situation like this where I have two order blocks and there's in a situation where I'm trying to take a sell, ideally, because one of the goals is to preserve your capital, preserve your capital, preserve your capital. I want to go for the one that's higher because if there's a chance that, yeah, I can get this entry right here and I'm gonna be in profit for a while. I'll be up 100 something pips, 112 pips. But what I've seen happen more times than not is I'm in profit, and then I see that profit dwindle. It dwindle, it dwindle. I'm back at break even. Okay, now I'm in the negative, and then boom, at some point I'm stopped out. So your two options basically is to get into that first position, be in profit temporarily, and then lose that trade, or to just simply wait for a price to come to the second one. And even if it doesn't touch it, you don't take any losses. So it's basically temporary win that turns into a loss, or a potential entry that can be a great run, a great entry, or no trade at all that helps you preserve your capital. And so this actually would have been close enough. It's like less than a pip. I would have entered, once I seen this one close, like I said, first opposing wrinkle, we still had a very nice stop loss based on about 90 pips. I would have added some 90 to 100 pips right there, and I would have take profit, 3 times that. So you got a 300 pip take profit, and I would have been out of this trade around 12. So that's every trade from this week up to now, from Monday to up to today, which is Thursday. They just exactly how I look at the market, just exactly how I'm going about entering my trades, and the potential interest that I see is not always just one. It's not just gonna be some magic gold light that just goes off in your head and say, "Oh, this is the one right here." Well, sometimes you have more than one option, right? And that's what it looks like. So make sure that you're looking, and these are session boxes I have on. These are only showing the New York session. But in any case, liquidity run followed by a break of structure, followed by a return to structure. Like wait for price to make its retracement. That's all I mean by return to structure. Wait for price to retrace back into your zone, and then you take action. Set your stop loss according, and then you go from there. But that is this week's trading entry setups and breaks of structure, like the whole nine for the NASDAQ. And tomorrow we have one last day for the week, and we'll go from there. But hope this helps you out. But until next time, peace.